We'll be going into introduction of Forex this morning, and I want you guys to follow me. I'll be explaining everything on introduction to Forex. Everything that's who entails Forex. I'll teach you guys the basics, the foundation. So sorry about that. So just give me your ears as I'll be going into the foundation of Forex this morning. We talk about we traders always trading the market. We trade different markets, different asset class. We trade different asset class, different instruments. So we're not just Forex traders, we are traders on this one because we can trade anything in the market, both commodities. We can trade gold, we can trade everything under metals, we can trade everything under cryptos, we can trade anything in the commodity aspect, that is the cotton, and we can trade what are they calling it? Equities. We can trade so many asset classes. So that's why we call ourselves traders, not just Forex traders. And anything that has a representation of candles on the chart, we can all trade them because they're all full with information. Now, going into Forex for newbies, this is going to be a journey whereby I'm going to explain and teach you guys on Forex from the beginner's level to I think where you can enjoy your process to call yourself a advanced trader, a professional trader. So I'll be teaching you from basic systematically to a place whereby you can be a professional trader. So I hope you enjoy this journey. So what's Forex? We know Forex is a decentralized global currency exchange, and it is one of the largest markets in the world. We should know that it is the global currency exchange and is one of the largest markets in the world, which is filled with liquidity of over $4 trillion. So here we say, what is Forex? Forex is a form of trading that involves exchanging some type of currency with another at different rates. You buy one currency and simultaneously sell another against it. So we can use an example of trying to buy one currency against the other currency. Like if I'm going to a country, maybe I'm going from Nigeria to United States. We all know we spend the naira in Nigeria and the dollar in US. So I cannot use my naira currency to make transactions in the US. So I have to buy the dollar. So when I get the dollar, when I get to United States, that's when I can use the dollar there. When I'm coming back to Nigeria, I can't use the dollar currency as a legal tender in this country, in Nigeria. So I have to change it back to the naira. So that's what all Forex entails. It involves the exchange of some type of currency with another at a different rate. You buying one currency and simultaneously selling it against the other. So what can be traded in Forex? The Forex market is an extremely liquid and very active, with over 3 trillion traded daily. Yeah, you can see that what can be traded in the Forex. The Forex market is extremely liquid and very active, with over 3 trillion traded daily. Some of the instruments can be traded as follows. Yeah, we have the currency pairs, whereby we have the Euro USD, GDP USD, USD JPY, UD CHF. We have USD ZAR. That's on the exotic. So, for example, under the currency pair, we have three major type of pairs we trade. We have the major pairs, which are the Euro USD, GDP USD, NZD USD, USD JPY, and we have the cross pairs. And the cross pairs are pairs that Euro CHF, NZD CHF, CAD, NZD. Those are the cross pairs, and cross pairs are pairs that we don't normally go into. We trade major pairs, so I would advise that those who want to start as a newbie, you stay on the major pairs, which are on your screen. Just stay on it. It will help you to develop and grow. And even sports moves faster. Then when you now become professional traders, you can now pick 2 to 3 additional pairs, but don't go for exotic pairs or don't go for cross pairs. So just stay on the major pairs. So the exotic pairs are USD, ZAR, Slovakia dollar, Singapore dollar, and so many like that. So we don't go there because they are emerging nations, emerging economy that is controlling those pairs. So there's not much involvement of many countries in those pairs. So I advise people to just stay on currency pairs. So and if you want to trade, another thing that can be traded in Forex is the commodity metals. Commodity and metals, we have gold, we have silver, we have oil, we have salt, we have rice, we have cotton, we have so many. And also, lastly, we can trade the stock indices. The stock indices that we trade the US 30, that's Dow Jones. We trade US 100, which is the Nasdaq. We trade S&P 500, which is the E-mini. So many like that. So to the next slide, who can participate in the Forex trading? Now, this is where the work is. The institutions are those who trade the Forex. The institutions are those who can move the candles. No retail traders can move a single candle. No combination of 200 or 300 or 100 traders, retail traders, can move a single candle in the market. It's only the institutions that have the ability to do so. And the institutions are the commercial bank and the investment bank. They are the one that offset liquidity into the market to trap major buyers or trap major sellers, to trap retail traders. So they galvanize their way into making them seek liquidity in one direction, trying to expose their human nature, then trap them in that, maybe a sell, then go for a buy. These are what institutional does. And we have the central bank also, Central Bank of England, and so many central banks that goes into Forex trading. We have the investment managers and hedge funds. These are people who collate people's individual funds to trade on a large capital. These people also collect from investment banks, collect from funds for organizations to trade. And now they pull huge liquidity together just to trade the Forex market. And also the multinational companies like Tesla, like NCN, like Zenith, like so many like that. They trade the Forex market. So many multinational corporations are into Forex market. And the retail traders, which are us, the individual investors, these are the second part of people who also trade the Forex market actively but doesn't have the power to move the market. So the institutions are those who have the power to move the market. So on to the next slide, and now we'll be talking about what is a pips. A pips, the unit of measurement. A pips is the unit of measurement to express the change in value between two currencies. That is, now we have Euro USD on our chart here. It's showing that if there is a movement of price, maybe from 200,000 naira or $200,000 to 2. Now, using the chart representation here, we have 1.1941. Now, if the chart changed to 1.200, there's already a change in the value of pips. Now, as at this point, we already know that a pips is a unit of measurement to express the change in the value between two currencies. So we have the if we can check here, you can see Euro USD. Euro is the base currency. USD is the quote currency here. So we are trading against the USD. Euro is trading against the USD. So at this point, if there's a change in price by 1.1941 to 1.1943, that's a 2 pips difference change. So that's that. A pips is the second or the fourth decimal digit of price quotes. Now, can you see when I said the USD is the quote currency? So if you want to understand pips very well, I'm going to mybabypips.com. You're going to get a lot about the foundation of what is pips. So over here, I will explain how the base currency how Euro is trading against US, which is the quote currency. Now, when the quote currency is changing, we can see that we can move the price can move from 1.941 to 9.142. And that expression itself brings a change in pips. Now, for the second example, we have USD/JPY. Now, look at, there's a difference between these two currencies here. We have this one that has just 1 O digit and 4 digits at the back of that O digits. Now, we have this here has 109.11. Now, JPY pairs are always having this kind of pips expression here. You have 2 digits at the back of its own number. That is why it's because we are trading against JPY, which is the quotes currency. Now, USD is stronger, which is the base currency, is stronger than the quote currency. So let's move forward. Now we have the 2 type of analysis. We have the technical analysis, we have the fundamental analysis. Though we also have the sentiment analysis, but we'll not be going into that today. So in technical analysis, traders study price movement. A person can look at historical price movement and determine the current trading condition and potential price movement. Now, if we look at this, we know that in the world of Forex, most retail traders use technical analysis to study price action. Now, as a technical analyst, you need to study price action. You need to see where the bank are hiding. We use different technical tools to anticipate and predict price using this technical analysis. These are what you're going to be taught. So many technical analysis concepts that is out there, but there's a lot of things you need to know about this technical analysis that will help your trading. It will help your trading so much that you will not have anything. So all those technical analysis are just representation of candles. So when you understand your candle movement, how it opens, how it closes, how you see price move from a particular point to a particular key levels, where price is coming from, where price is going to, what is the intention and the anticipation of what the market wants to do next. So what will be taught in the technical analysis, and we have various concepts out there. We have the harmonics, we have ICT, we have smart money, we have support and resistance, we have structure and liquidity, we have Fibonacci calculations. We have so many. We have Elliott wave. So many technical concepts that can be used to teach this technical analysis. So now, also, the second part of the analysis, which I'll be going to, is the fundamental analysis. It's the study of what is going on in the world and around us, economically and financially speaking. and it tends to focus on how macroeconomics elements such as the growth of economic, inflation rate, unemployment affect whatever we are trading. Yeah, based on fundamental analysis, we see that the news, war, um, unemployment, um, wage bills affect the economy. See, what we don't understand in market is that whatever that is surrounding us presently affects the market. Whatever that is happening presently affects the market, be it war, be it climate change, be it inflation, be it unemployment, be it wage bill, be it healthcare. It affects the market either positively or negatively. And those people who focuses on fundamental analysis use the news to anticipate what is going on in the market, to anticipate what can happen, and they can implement what they need to do and enter a particular trade using what the fundamental analysis. And there's a site that can be used to also check as with the technical analyst, the TA, use to what, to know what kind of news we're going to play at a particular time, at a particular session. And the name of the Forex is www.forexfactory.com. I think let me show you an example of that. Yeah, this is an example of the site I just mentioned, www.forexfactory.com. So we have news with the red folder, we have news with yellow folder, we have the one of orange folder, we have the gray folder. That is, those gray folder indicate that there's no news. The yellow folder is the one that is probably one of the most environments whereby traders can trade. Also, the orange is still manageable, but the red, for a newbie, avoid it. Avoid the red folders. Avoid every red folders that you see, especially on USD. Look at what happened yesterday here on core CPI. People who doesn't know how to trade, who are just coming into it, even advanced and professional traders avoid all these trades. Sometimes they avoid this red folder. So there's allow market to play out, then after a while, they join the market. So the market has already given you a blueprint of what it's supposed to do. So on to the next. Yeah, I'm going to teach you a lot about this technical analysis, and I'm going to start with candlestick. I think if you check on my YouTube, you'll see anatomy of candlestick formation. Like, this is exactly everything about it. Yeah, we're going to teach you how. Now we can see a green candle here, we can see a red candle here. We can see how this candle formation, this is what we'll be trading in the market. This candle is full of informations that you need to sit down and study over time. Now you can see the open, low, high, close. This is how the bullish candle formation happens. So when you want to enter a market, you should know that if we're going to be bullish, we're going to have an open candle, then price move down low to a particular key level, then blast up by going bullish to create a high, then it has to close. And vice versa for a sell. You will see that price open, then go high, then go low, then close. That is how the formation of candlestick patterns are. So the Forex candlestick, we have the bullish candle, which is this. The buyers are stronger than sellers. You can see sellers in this bullish candle. Why the bearish candle says sellers are stronger than the buyers? That's what's supposed to be. Sorry about that. So this is the bullish candle, which involves buyers, and the bearish candles, which involves sellers. Now we're going to be talking about the trading platform. We have MT4 and MT5. There are other trading platforms like C Traders and so many now that are coming up now. And MT4 is kind of one of those old trading tools whereby you can place your trade. They are those old ones, but MT5 is improving. So the MT4 and MT5 is simply a trading platform used by traders and brokers. Traders use it to view real-time currency price, open or adjust order and get technical and fundamental analysis. Meanwhile, broker use the MT4 platform to reach a broader audience. So broker use even MT5 and even see traders. But the major one you're going to be seeing out there is MT4 and MT5. So these are platforms that we, the trader, use to place our trades. We can analyze through it also, but there are better platforms to analyze, which is below the trading view. Now, if you're using a laptop, just go to tradingview.com, or if you're using a phone, just download it on App Store, the Apple iOS Store, or Apple Store, or Play Store. You can download the TradingView there, the app, and you can go there and play around with it. So the TradingView is a charting analysis platform for various financial markets and assets. It's one of the best and the cheapest charting tool on the web, that is true. That is true. You can do a lot with TradingView. You can analyze. In fact, there are people who connect their trading accounts with TradingView and trade from it instead of going into their MT4, MT5 to place trade. So these are the platforms you're going to be using majorly. Now on to the next, Forex broker. A Forex broker is a financial intermediary that match counterparties to a transaction without being a party to it. They work on commission, which we know as spread in Forex. We know that spread is a difference between a bid price and an ask price. And so we know that a broker is an agent of a company that executes order to buy and sell currency for their clients. Now, what we do as Forex traders is that we can't go to the major market pool itself. So the broker brings the market to us. When they bring the market pools, they are the one that has the huge finances, and it is we that can use our little money, put it, and the broker will slot in our orders for us. There was a time whereby I think one of those who have been trading for a very long time says that they don't use the screen, the charts, this is the way we are using it, that they have to check through the newspaper, call their broker, place a trade over a week ahead or 2 weeks ahead for a trade to what's happened. And the broker slot in their orders. So when the time of the trade comes, and their orders is being fulfilled, they get a call from their brokers. So broker is not a thing of today, it has been for a very long time. So we have the two type of broker. We have the regulated broker, the licensed, regulated, and authorized to operate as a Forex broker in your country. And the unregulated are not licensed, authorized to operate as a Forex broker in your country. So Forex market regulation refers to the rules and laws that firms operating in the Forex industry must follow. So the purpose of regulation is to protect you from undisclosed financial risk, abusive practice like price and other manipulation and fraud. Most of those brokers, we have the unsincere brokers that does that. They manipulate others and they commit fraud. So in fact they can spread your spread on an actual particular trade whereby you are being filled in and price it your stop loss, and in the normal market, the market didn't even get there. So that's the work of most brokers, and their same is also to make profit. So they're making profit of your order, they're making profits even while you make money and even while you lose money. I think the last slide. Okay, I think that's all for now. That's all. That's everything I'm going to be teaching you on Forex, introduction to Forex. So in our next class, I'm going to be teaching you a lot. I'm going to teach you a lot of basic things you need to know. But we are going to be taking it systematically. I'll teach you how to use TradingView. I'll teach you some basic concept that will help you to build your foundation level. You will have to have a strong foundation level, whereby we'll be talking about structure. We'll be talking about how you how price prints. We're going to be talking about price cycle and range cycle. We're talking about price delivery. We'll be talking about the formation, the anatomy of candle, and I think that's a plus already. That's on my site, so you can go there. It's on my YouTube, I mean, sir. So you can go there and watch it. But there's still in-depth. There's still a lot of in-depth explanation on candlestick formation and the anatomy of candle. So I want you to enjoy yourself in this process. I'm congratulating you for choosing this path. Enjoy the process, and God bless. Thank you very much.